evening, TheoTrade, and welcome to the Theo Nightly video for June 21st, 2018. This is Corey Rosenblum bringing you a focus on financials. We're in this trading range. Financial stocks seen here by the XLF, our financial sector spider, are into a mega support level. Massive support shelf at 27 per share. The upper part of the rectangle pattern, or the sideways trading range, is just shy of 28.50. And the logic might suggest a bounce here, but before we take a look at just the financials sector spider itself, kind of the broader based ETF, I thought it'd be nice to take a look at each individual leading component or large percentage holding in the financial sector spider. We'll start with Wells Fargo. And what we're looking at, here's what we're trying to build out with tonight's video and into Friday and beyond. The main question is, will these financials find support? Everything will be okay and will bounce off like we have in the past, or is something else underway? And these key price levels, both in the XLF and in these names right here, leading components, you're familiar with most of the names, I would assume, in the financial sector. But if not, we can take a look just for a moment and focus on these financial companies. And again, Wells Fargo, its pivot spots, same thing at 56 per share. Now it happens to be beneath its 200-day simple average. And we'll talk about all of these stocks. Some of them have compression triangle patterns. Some are beneath or above the 200-day simple moving average. And any specific spot marker or pivot levels that we are looking at. You'll be able to build trades either now, playing back and forth between these spot markers and levels, essentially aiming to short the high, buy the lows, or you might want to wait for a future breakout to put on or build positions. So its pivot spots for Wells Fargo, 54, and again 56. Any type of downside break would potentially lead to a sell swing or a liquidation event, maybe as quickly as this one here in April, May, down to 50 per share. And in USB, US Bank Corp, we can also see its pivot roughly 50. I'll go ahead and put a trend line on here, 52 per share, and roughly 49 per share. I also like to draw a midpoint, even think of it as the magnet, which is the midpoint of the pattern. At this spot, watch 52 for resistance and 50, almost 50 for its support. Our main thesis, TheoTrade, is that if the financial sector spider, I'll review back to it, breaks beneath 27, you'll probably see these names break as well. However, we may assume that these spots will hold. So as we go through each of these names, keep that concept in mind. Will it break, or will this just be one more support bounce retracement in the ongoing bull market? Or of course, is this something different? And this is where we're going to get interesting. Examples like PNC and Goldman Sachs, Morgan Stanley, some others we'll see in a moment, have this descending triangle pattern. Its spot level is 140 per share. You can easily see how, and I'll zoom in, that PNC, if it holds support and if shares rally, the next stopping point or trade exit point is up to about 147. $7 spot play to risk about $1 to $2 in the event that this holds. But if it fails and support gets broken by a bearish sell swing, that will target down toward 130 per share. So if you're going to decide to go long or play any type of option positions off of this departure point or others, just keep in mind that a range expansion event could quickly take PNC and other financial stocks toward lower support targets. But again, we may assume bounce strategies. I may even call that the dominant thesis until proven otherwise. And that otherwise is what we would expect as a catalyst to lead down to these lower targets that we'll talk about in stocks like Morgan Stanley. We're watching 50 per share for Morgan Stanley, and its descending pattern. I'll add that in as well, because again, a lot of financial stocks are doing this type of pattern. Descending pattern, descending triangle. If you want to go as far as to call it a head and shoulders, that's fine too, but I'm just framing these as trend line patterns. Logic being, maybe again assuming hold support, bounce, rally back, in this case about 52.50, but if the future results in a breakdown, especially on high volume, which has me a little bit concerned the levels might not hold, then you do have two downside targets for Morgan Stanley. Roughly the prior low, 47.50, and then down to about 44 per share. In JP Morgan, we see that it is holding two support levels. The first being the 200-day simple moving average. Remember to reference that with all of these stocks as well. Is the stock beneath it? Is the stock above it? And of course, its sideways trend line. It's at 105 per share. We're looking for any type of bounce play off of support to take us to $111. That's JP Morgan. Goldman Sachs, and you can see on an hourly chart to the right, we can call these kind of fangs or little stab reverse. It's essentially indicative of a violent battle between the bears who want these things to break and hit these downside targets and the bulls who don't want that to happen. Bulls have the edge as long as these stocks hold support because they've reversed here a couple times in the past in 2018, but bears will rapidly gain the edge of the supply-demand relationship and that will probably result in a downside liquidation. Again, no prediction, just noting levels, spots, markers, and using our if-then type of logic. Same in Citi. So its spot is roughly 66. We can add its declining trend line to join it with the other financial stocks, Head and Shoulders, Triangle, etc., with its upper target just about 69.50. Now, Berkshire Hathaway, we don't always talk about and don't usually trade Berkshire Hathaway, but it is the largest holding in the XLF. It's about 10%. This is Warren Buffett's company, probably most familiar to you as Warren Buffett's company, Berkshire Hathaway here. So it as well this is also the B shares, not the A shares, B shares, Berkshire B. So it's about 189 per share. It also is beneath the 200-day moving average, and it also is seeing surging bear volume. That potentially, and other stocks like it, tilt the probabilities to the bear side, but I don't want to concede that point until we get an actual price breakout. And again, you can see the battle and the tricks and the traps that occur at mega support levels. All of these stocks and the XLF are at mega support levels. Bank of America is holding its 200-day simple. Your pivot spot there is just about 29 per share, and then 30.50. It also has a triangle or some type of distribution pattern that will become triggered or active beneath 28.50 and then 28. Downside play would be to about 26. Finishing them up is American Express. Again, two spots of hold, two spots of potential reversal or failure if these spots fail to hold any type of bullish plays off this 96 level and playing back to 100, maybe as high as 102. So just taking a look inside this again, it may be safer to assume a bounce plan, but continue to watch this bear or sell volume. Abandon the bullish positions or wait if you are expecting a downside break to join into the bear side, liquidation side, the sell swing that will potentially occur beneath 27 on the XLF and related areas in the other stocks we took a look at. This again is Corey Rosenblum bringing the TheoTrade Nightly Video for June 21st, 2018.